Hello and welcome to this edition of Trade Zone presented by Eightcap. My name is Stuart McPhee and it's great to have your company. I'm coming to you from Melbourne, Australia on this Wednesday, the 15th of June, just gone 7 o'clock for me here on the east coast of Australia. Hope you're well, wherever you are joining us, wherever you are around the world. It's great to have your company. So I'm going to be with you here for the next 30 minutes or so. And just like I've done with the other presentations or the other trade zones this month, and bearing in mind I do have another Monday and Wednesday next week coming up as well, I am going to start just with a little bit of education. I think it's really important. You know, you're in this session, we just need to empower ourselves to develop a trading plan we're going to have with confidence, you know, have a good robust trading strategy, have wonderfully robust and strong risk management rules, and then of course have us working at peak performance because we potentially are the weakest link, and having us working very, very well to ensure we give us the greatest chance of being successful, consistently profitable at this trading game. And what we'll do is we'll just go through a little bit of, as I said, education through a PowerPoint presentation. I'm actually going to show you another piece of software in this session just for a minute or two to open your eyes to some of the tools that traders around the world make themselves available to help them in developing a strategy, because that's what I'm going to be talking about tonight or in this session, is developing a strategy. And then, of course, we'll go and have a look at some charts, and we'll go and have a look at some of the major currency pairs. We'll look at the euro, US, the Australian dollar, the British pound, and just recap, you know, what I was talking about last week, and in fact, 48 hours ago, and what I was talking about there as well. Again, if you have any questions during this session, if you are listening to it and watching it live, please do not hesitate to just get into the questions or the chat window. I have that open here on my screen, and hopefully I'll get around to reading your question and doing my very best to answer it for you. So let's get into the presentation. So if you've heard me speak in one of the last few sessions, you've seen this slide already. And I just want to reiterate what I'm saying, and that is, you know, it is absolutely critical that you develop a trading plan. I could go period, you know, full stop, stop there. It is absolutely critical you develop a trading plan. Right, the old, you know, if you fail to plan, you're planning to fail, right? You've heard that before. But more importantly with that trading plan is it must be right for you. Must be right for you, must suit your personality, must resonate with you. You must be very, very comfortable with it. The amount of risk that this trading plan takes, you need to be incredibly comfortable with that level of risk. Why? Well, it's your money, not mine. It's your money you're putting at risk, and you need to be comfortable with that risk exposure that you have. And I'm the, you know, you're the one that has to go to bed of a night and sleep well and not wake up in the middle of the night worried about trade you have on, because that's unfortunately the reality of what some people go through with regards to their trading and just simply taking on too much risk. And then when you have developed that trading plan that's right for you, the risk tolerance is correct, you know, that risk profile is correct, and you have good robust rules for getting into trades, position sizing and getting out, then of course it's up to you. It's up to you to implement and put that plan into action and actually follow through that plan with great conviction, with confidence, with discipline, and all those character attributes that we could talk about what makes a good trader. But this is what I want to talk about specifically just in this session right now, is a very, very small part of that. And that is, you know, okay, Stuart, I believe you. I need to have a plan. Yeah. If you fail to plan, you plan to fail. I get all that. But what I'm having trouble with, Stuart, is answering those questions. You know, how do I get into trades? How do I position size? How do I get out? So in my limited time in this session, I just want to talk about the first part of that trading plan. That's how do I get in? So I just want to very briefly talk about developing a trading strategy. And what I'm going to run you through here is a process to help you, just a logical process to help you get into that position where you do in fact have some trading rules to help you have a trading strategy, to help you answer that question of how do I get into trades? And it's as simple as this. I'm going to show you each of these 5 steps here. I'm going to show you each of these and we'll just explain them. The first one is to, would you believe, look at price, look at data, as we say in Australia, right? Look at price. Go through chart after chart after chart, whether it be currency pairs you're interested in trading, equities from an exchange you follow, the Australian, you know, exchange, or it might be the London or whatever it might be. Look at charts for those instruments you have an interest in trading. So it could be currencies, indices, it could be some commodities, could be equities. Once you look at all those charts and why are you doing that? I want you to make observations. I want you to make observations. Now have a think about this. It's looking at a chart, and let's just bring up MT4 really, really quickly. Excuse me, as an example. And I'm just going to pull over here the ASX 200, just very, very briefly. And you might see, well, every time, I'm just trying to think. Okay, here's just a recent example right here. I'll just zoom in a little bit so you can see it a bit better. This one here. So we're looking at this 3 candlestick pattern here. So strong up day, green, this sort of funny looking candlestick, and then a strong red. And you may make an observation that says every time I have a nice little uptrend for 2 or 3 weeks, and I see one of these candlesticks where the body is really, really small, almost a line. And we do see candlesticks that have a body with a line, just like that one there and this one here. And this one is not dissimilar to that, just the body's quite small. And the body's sort of roughly in the middle of the range between the high and the low. And some may loosely describe that candlestick as a doji candlestick, for example, one of my favorites. Just like this one here is a doji, and there'll be other ones. There's another one there. And then often once I see that, Stuart, I then see a reversal. Okay, great. That's fantastic. That's the first step. We've looked at charts, we've made observations. Now, from those observations, we need to define rules on how would we trade those observations. And here's the interesting thing. Over the years, and I've done this for a long time now, whether it be speaking to large groups of people at expos and the like and talking to people afterwards, it's incredible how many people, and I say this with great admiration for these people and very much as a positive, it's incredible how many people have come up to me afterwards and said, here you go, look at my chart on their laptop, or they pull out their big tablet or something. Have a look at this. I've noticed, Stuart, that every time this candlestick forms or it hits this level or it does this, I notice it actually tends to roll over and fall off. The price actually declines. And I go, that's fantastic. That's great. Now what you need to do is take that the next step. That's very good to have that theory, but go ahead and define that observation specifically with clearly defined rules. You need to keep going. So it's great. And lots of traders all around the world who certainly learn technical analysis will make these observations, which is fantastic, but you need to keep going. So define the rule on how to trade those observations. Then what we're going to do is we're going to test that rule. We're going to validate it. We're going to prove it. Sorry, that theory, the set of rules, we're going to prove it or disprove it. We're going to say now with great confidence, wow, I think this strategy could work. I've just tested it over a period of time, 1 week, 1 month, 6 months, the last 5 years, whatever's applicable to your trading style. And we can collate a fair amount of information through testing. And I still remember doing this manually a long time ago, manually following through charts day by day, tracking the performance of trades. Once I got into them based on my set criterion, it's a long time ago now, but I went through this process. And I can tell you the real positive from this, the obvious positive is finding something that could possibly work, something that you can have some confidence in to actually go into the market with some consistency and apply those set of rules, all the time with great objectivity. That's the positive out of it, but there's also another positive. And that is you get a really good understanding of what works and what doesn't work. And as silly as it sounds, that's really important. Can you believe that? So it's really important to sort of work out what works and what doesn't work. And going through this process can really help this. So we've looked at price, we've made observations, and then we've defined rules on how, if I saw that for real right now, what rules could I follow to actually get me into a trade? That's all we're trying to do. Then we go and prove or disprove that. We go and test that theory. And then of course, we can trade that for real, continue to review it, continue to modify it, improve it, hopefully, and finally work our way towards, a set of rules that we can have confidence in. I cannot overstate the importance of doing this, of getting confidence in a strategy, but more importantly, having a set of rules that you apply with great consistency. And what I don't like to see traders do, and too many traders do it, is they trade indiscriminately. They trade randomly. They'll just look at a few charts and they'll, I might have said this in another session where they'll look at the Australian dollar right now and go, what do I see? What could I possibly trade here? and we're trying to look for patterns, we're trying to look for candlesticks. We pull up our candlestick book here and we flick through hundreds of pages of candlestick patterns and explanations and go, what can I see here? What can I trade? That's not a way to trade. That to me is too random. It's a bit indiscriminate, it's a bit sporadic. We need to, well, I can tell you what good traders do. You need to find a set of rules that works well over time, that gives you probability, right? High probability, low risk trading opportunities. That's what you need to, work towards doing. And this sort of process can help you work towards having those set of rules that you've now proven or disproven, but proven, validated, and then actually start that process of trading for real with you now being tested as the single biggest factor in your trading success. That's you. Now you're being tested with these set of rules. This is what good traders do. This is the process we work towards to get a trading plan and a strategy that's going to work well for us. I just wanted to show you another piece of software. And let me be very clear, I'm not here to sell you software. So please don't get me wrong. I am absolutely not here to sell you software. All I want to do is open your eyes to simply a tool that is available and people use to validate a trading strategy and to validate a set of rules. And all I'm going to do now is, and this may have actually be of some interest to you. So what I'm going to do now is basically a market scan of the Australian market, just the top 500, the All Ordinaries Index. And we know that most equity markets have fallen quite strongly. So all I'm going to do now is just a quick scan of the top 500 stocks for all the stocks in the last week that have achieved a 12-month low. Now, I can assure you there's going to be quite a few of them, right? And sure enough, there they are, 147. So 147 out of 500 just in the last week have achieved a 12-month low. But have a think about what I just did. Have a think about the number crunching I was just able to do within seconds. And what we can do with a tool like this, and again, please, I'm not here to sell you software. I just want to open your eyes to the fact that there is software available, and I'll select perhaps one of my, this particular trading system here, which I refer to as Ignition, which is one of my trading system. And if I just go click and go scan the market, it will now provide me a list of all the securities, there they are, there's 16 of them, that have met that criterion today. That's it. What does that allow me to do? Well, one, I was able to do that very, very quickly. Obviously, there's a lot of number crunching there to come up with that list. But what it allows me to do, if I come back to this, and I won't show you any more of that software, but what it allows me to do is actually start to test those set of rules. I have now put my criterion into that tool, that piece of software, and go and find me all the stocks that Eightcap offer, equities, CFDs over, top 100, whatever it might be. Let me just go and scan those, find all those stocks that today or the last week or whatever have met my criterion that we're actually working through now. Let's go and find them all. Let's now trade them. Let's, simulate trading of them. Even better than that, what we can do with software like this is I can do that very same market scan, but do it 6 months ago. Do it on some set date, any time in the past. And what that allows me to do is say, go back 12 months. Let's do the scan as if it was 12 months ago. We do the scan, we find all the stocks that have met that criterion. We go through a process. If we were trading for real, which one would I pick? And then we can actually go and track those because the price information, the data is already there for the next 12 months. So we can actually track now the performance, and we can keep doing that. This is what this allows us to do. This allows us to look at price, make observations, define rules, and then go and test them. That's what traders do, right? So I hope that's been of some use to you. I want to just really encourage you. A lot of people have theories about technical analysis. I see this pattern all the time. It does this and it does. Great. Go the step further. Let's define the rules on how to trade that observation you've just made. Let's go and test it. Prove it once and for all. Does it actually work? One thing more I want to share with you before we go and look at some charts is the importance of developing a strategy that suits your time frame. So I have a very simple guide here that I'm going to run you through, which is probably a little bit confusing at the moment, but I want to run you through this process of how do we define our trading style for me, right? Me as an individual trader, how do I find that style? And I don't think this is taught a lot. And that is actually because the way you trade, on daily charts or weekly charts, could you imagine, is very different to the way you would trade off a 1-minute chart or a 5-minute chart, just different. The time tested trading rules may be the same, but the way you apply them is very different. So it doesn't. So I think when people don't, encourage you or, be specific and say you really need to define a trading style, it's very easy for us to think, well, that means I could probably trade everything and over any time frame. Well, no, I don't think good trading is like that. You really need to remember the first slide, develop a trading plan which is right for you. And I only mentioned risk tolerance, and I'll mention this in just a moment. But another key ingredient to that is the time you have available to trade. As obvious as it seems, that's a real key factor in developing a trading plan that's right for you. Okay, let's just go through a simple exercise with me now. So looking at this table here with the 3 columns, fast forward 6 months or 12 months, and you are now watching yourself trade, visualizing yourself trading, sitting at your office in your desk somewhere, big monitor there, and you're trading, and things are going well. Finally, you've cracked something. Things are going well. You're starting to get some profits. Just things are the way you want them to be with your trading. Have a think about that. Visualize that. Now have a think about the way you are trading. All your profitable trades, how long are they going for? Roughly, what is your average profitable trade duration? All of us then could have some idea, well, I know I sort of want to trade this way, and I want to be in trades for weeks and months. Okay, that's your answer. No, I only want to be in trades for hours. Okay, that's all right as well, or days or weeks or whatever it might be. Have a think about that time frame of your average profitable trade duration. With that information, slot yourself into one of the items in that far right-hand column where it says average trade duration. Are you minutes to hours, hours to days, days to weeks, or the other two? Which one are you? You should be able to put yourself into one of those categories. Once you've identified which one you fit into, just come across to the left, and now I'm going to assign you a trading style. I've just assigned you a trading style. I can tell you now that my equity trading through my superannuation fund is weeks to months. So that would be the second last item. So I come across to the middle. My trading, therefore, has now been categorized by myself as medium-term trading. I can tell you my currency trading fits into the third one, that's days to weeks. Therefore, that's short-term trading so far as my currencies. So I think it's important that we categorize, what is our trading style? But this is a more important thing, is once we've done that, we need to identify a suitable chart periodicity to trade that particular trading style. So if I am a long-term trader, which was weeks to months, average profitable trade duration, do you think I could care less about looking at a 1-minute chart or a 5-minute chart? No relevance to me whatsoever what happens in the next few minutes or what just happened in the last 5 minutes, when my trading style is looking at the much bigger picture, much bigger longer term time frame with trends. And I'm just looking at the much bigger picture rather than just what's happening in the next minute or two. So once you've identified that trading style, I've then suggested to you what a suitable chart periodicity would be. For example, my short-term currency trading, what would be best for me would be trading 1-hour charts, 4-hourly charts, or daily charts. For my medium-term trading with my equities, I'd be more inclined to be perhaps trading daily or weekly charts, because that complements well that particular trading style. And I think that's really important for you. If you haven't done that, I think it's important you do that. You identify what is my trading style, because then I think developing the strategy becomes a little bit more a clearer path for you, rather than just trying to trade everything and anything at any time for any period of time. I think it's much more important that we focus our effort just into one particular trading style. And one more thing I just want to go through, and it's these two major factors, I think, again, and that's risk and time. And again, I'm saying to you now, and you go, yeah, that's obvious. I don't need to know. Yeah, but it's interesting how many people don't even think about it. So I think your personality, your time available will actually be a large ingredients or factors in your trading style that you select. Could you believe that some just are not very good with risk? Some cannot tolerate lots of risk. And the interesting thing about risk is, if I'm talking to 50 people in a room, I can't say, hey, you're really high risk person, and the person next to you, they're very conservative. You can't tell by the way people look. You just can't. And I tell people all the time that I think the way you actually work out your risk tolerance is actually through physical feel. I really do. I really think it's a physical thing, that if you put on way too much or take too much risk, you'll feel it and you'll be really anxious and really nervous and really worried and stressed. Well, guess what? You're probably taking on too much risk. So it's something you really need to feel. And the other thing is, as simple as it sounds, some people just don't have the time. Working X hours at work, whether it be, looking after a household as a mother or a father or whatever it might be, just don't have the time to do this. Well, how are you going to trade really, really short trading styles if you just don't have the time to look at this stuff all the time? So the key is you need to understand where you fit into all of that, and your trading plan and your trading style should follow accordingly. And that's really important to me. And again, this is just through my experience of having worked with many, many traders over the years and helping them work towards developing, I know this sounds cliche, I've been saying it all the time, developing a trading plan that's right for you, that you're going to have confidence in, be disciplined with, and implement that. That's the key to consistent profitability. Not just trading well the next week, but we're talking about over an extended period of time, not just 6 months, I mean 6 years and beyond, right? If we really want to do this well over an extended period of time, you need to go through this process of developing a trading plan that you're going to have confidence in. Let's go and have a look at some charts. That's enough of my education for this session. I've got a lot more of that, but these short sessions, we just cover a little bit on. I think it's. I really do want to. I feel like I want to help you a little bit, just not looking at live charts, but actually, it's the old. Should I catch a fish for you? Help or teach you how to catch that fish, and that's what I'm trying to do really with the education, is teach you how to catch that fish rather than catching it for you. So let's go and have a look at some charts. So, and I was in a training session just yesterday, and we're looking at support and resistance, and we're looking at the Euro US, and we're looking at the Australian dollar, and we'll have a look at those right now, and certainly we'll look at the Euro. And I mentioned this in every single one of my sessions so far, and that is clearly the 107.50 level is a level of significance, where it, the Euro found a lot of support back here. What's that? 2 months ago, fair bit of support there, and finally smashed through. The next day, sort of retested that level, and then found a lot of selling pressure, downward pressure. Finally got back, snuck its head over, and then got smashed pretty quickly. When you look at this, that's 5, 10, 13 days. 13 days where it's actually looked up, tried to move through that 107.50 level, and just can't do it. And even though it did get over here, very next day it's smashed down, and then even more so, just if you weren't certain that previous day, well, now we're really sure, right? We don't want to be above 107.50. So for 13 days, it's smashing up against there, even tested again, and then just falls away really, really sharply. And if we come down to these sort of levels here, currently where it is, and just below sort of that 104 level, down to these lows here, it wasn't any surprise to me that it sort of found a bit of support down here. And the interesting thing about finding support is, if I just zoom out a little bit further, when we've found support, sort of around this level here, so it's fallen over the course of a few weeks and then rallied back up again. When it came back down again, it just sort of fell through that level. That level was sort of just a bit out in the middle of nowhere. And when I think in terms of currencies, I think of round numbers. I think in multiples of 10 cents, 5 cents, and then sometimes the 250s. In other words, in this case, the 107.50 is 250 pips from 105 and also 110. But the key about this current level is it is out in the middle of nowhere, but at the same time, if I change this to a weekly chart, at the same time, we're talking about a multi-year low. We're talking about roughly a 6-year low, if in fact it hasn't fallen through there, and we're talking about a lot more than that, and maybe even 20 years or so, something ridiculous, right? So when I look at that and I see, well, this is the previous low, this was roughly a 14-year low, and it's right back down to that level, and sure enough, it bounces off again. That's the beauty of gaining perspective by zooming out as far as you can. So the fact that this turning point here sort of was in the middle of nowhere in a little bit, it wasn't at 105, but when you look at the perspective, it was at the most recent significant low, and we're talking about a multi-year low, smack bang on that level. Now, it's not going to be exactly there, but if I just draw the crosshairs there, geez, we're pretty close, aren't we? So that's the significance of that level. And so when we come back to the daily chart and we look at more recently, and it's been really smashed off 107.50. I wasn't at all surprised, and I think I might have even said that Monday that, I wouldn't be at all surprised. In fact, from memory now, I did definitely say it. I wouldn't be at all surprised, just a little bit of a rally. Well, again, that's the significance of this level. And, we talk about support and resistance a lot. I think it has great relevance and great application for currency trading. I mean, I think the more technical traders you have involved in a product, I mean, just clearly the more valid, the more relevant, the more effective technical analysis tools like, patterns and support and resistance and trends are going to be, because the more people are looking at them. Now, there's no doubt, just from a fundamental point of view, just for a moment, that, what the Federal Reserve is going to do shortly has had an impact. And Australia's central bank raised rates 50 basis points last week, which was more than expected. And now we're talking about the Federal Reserve very, very shortly, in the next 24 hours, raising rates also by maybe 50, maybe even as much as 75 points, which is significant. Everyone knows that it increases demand for the US dollar, but of course it decreases the demand for the counter currencies that all those currency pairs where the US dollar is a counter currency to. So it diminishes the demand for that. So that's why we have seen the Australian dollar fall off really, really sharply, the British pound, the euro in this case. But of course, we've seen just a rally for a lot of these, actually. We've just seen in the last 24 hours or so, the Australian dollar the same. Again, this is sort of out in the middle of nowhere, this low, but it is the most, again, if we come out a little bit, it is a multi-year low. You have to go back, more than 2 years for when it was lower than that. So even though it's not being supported by a round number of being, 65 cents, it is a significant low. It's not like this one here. Sure enough, this is a low, but when it came back down to that level again, sort of ignored it, just keep going. Why? Well, it's just out in the middle of nowhere. This is also out in the middle of nowhere, not being supported by a round number, but it's a more significant low because it's a 2-year low. And if it moves through that level, now we're talking about multi-year lows. And sure enough, again, it's been sold off very, very strongly. But again, it's found support at that significant level. And it has obviously been able to rally up just in the last 24 hours or so. And again, if we come up to this round number at 70 cents, again, nice round number. If enough people think about selling at 70, not buying anymore, well, that just shifts the sentiment again. And it shifts from being bullish and pushing it up to that level to all of a sudden feeling a lot of downward pressure at that level. The 70 cent level stands tall, and sure enough, price just rolls over again. And again, we retest that significant low, which we now know is roughly a 2-year low. British pound's no different, and I've actually drawn a line in there at 120. Why? It's a nice round number. It's a multiple of 10 cents, like I mentioned earlier. And sure enough, price, just like the euro, just like the Australian dollar, 3 or 4 days of really being smashed, really being sold off very, very heavily. Where does it turn? Nice round number, 120, right? Multiple of 10 cents. People think in terms of, they think in terms of these round numbers. They don't think in terms of 121.28 or 119.83. No, they think in terms of 120. It's just an obvious target. And if enough people think that way, sure enough, we get a glut of demand, we get a glut of supply, whatever it might be, and of course, price responds accordingly. It's nothing the Bank of England have said. It's nothing the Federal Reserve are going to say, but the Bank of England, they haven't said, we don't think it's worth less than 120. They haven't said anything like that. It's just, this is technical trading. This is just enough people responding to those key levels, and sure enough, the British pound bounces off 120. Why? It's a nice round number. And I'll just quickly look at the Australian market as well, the ASX 200. I was just talking about this earlier, but we're now talking about significant lows. Again, we're going back to 18 months or so. The interesting thing about this is when you see gaps in an index, that's significant. Stocks gap all the time, but when an index gaps, that's something, right? That's really quite profound and pretty significant when an index gaps, because it doesn't happen very often. And of course, it does mean, generally speaking, there's just been an overwhelming amount of either demand for a gap up or supply for a gap down. Just checking my time here as I approach halfway past the hour. That's probably enough for me just for this session. Again, I'll be back next week, Monday, Wednesday, same time. Again, we'll just keep looking at a few more charts. Again, I want to run through some education, talk about the next step of our trading plan. Tonight, I just wanted to spend a little bit of time about a process to help us, identify how do we look for trades? How do we identify our entry criterion to get into trades? And next week, I want to start talking about, setting stops, managing risk, how do we position size, and just that reward to risk and how we set up that so far as putting that together in our trading plan. Well, that's the end of my 30 minutes. Wherever, again, you've been listening all around the world, thank you very much for your time. Thank you very much for your company. It's been my pleasure to be with you here. And I hope I see you again next week for, again, the same time for both Monday and Wednesday sessions next week. Until then, good trading.